Hey Sean, can you hear us?
Yeah, I can hear you. Hello.
Hey, how are you?
Doing good, thank you.
Yeah, might not be a lot of people on this call. Obviously, we're regrowing the team, but it doesn't matter. Even if it's a few of us, we'll share the recording anyway, and then hopefully next coming week there'll be a lot more people. But the aim really with the Signal group is that we're trying to regrow the community. Obviously, everyone knows, I think in 2021, 2022, we had a lot of students, but we stopped mentoring because we were just managing our personal funds and our investor funds. So the goal of the Signal page is obviously to get you guys profitable. I know a lot. Are you trading a funded account at the moment, or?
Yeah, I'm doing a small account, but I'm just trying to learn really, so I'm putting on really small position sizes.
Okay, that's cool. What account size are you doing at the moment?
Just a 15K
15. Okay,
E8.
that's. I mean,
Yeah.
that's still fine. EA is a good prop firm anyway. The guy who's the CEO, well, actually, I mentored him back in the day, so it
Oh
is,
wow.
yeah, he's a legit prop firm. So yeah, they definitely pay out. How are you getting on with that at the moment?
Almost break even. I mean, I just started a few days ago, so
Ah, okay, yeah, perfect. Obviously, with funded accounts, the most important thing is risk management because there will be days that obviously the trading is very good, and then there'll be trades days where the trading can be break even or stop losses because obviously, as you'll learn, the system is quite intricate, and obviously if there's any fatigue, you cannot execute on the system, and mo most of our trades give reactions, so it's a good idea to break even on those trades, especially gold after let's say 30, 40 pips. I don't know, on the FX pairs or after maybe 10, 15 pips, you should break even. But we'll try and advise the best we can. It's not always possible, but you should definitely break even because as you've seen, we send a lot of trades. And had we, even on Thursday, I sent the gold buys here, but I wasn't expecting it to go all the way up here. But we'll talk about why it went all the way back up here. It was to do with structure. Had we held that buy and held it all the way, that would have, the pip output would have been even more. So, there's only small tweaks here and there, and obviously we're capable of catching most of these moves, as you'll learn. But what's your experience with trading and education?
I mean, I've been trading for a long time, but I guess I've hit sort of like a plateau, like
Yeah,
in my knowledge. I feel like I've heard all of the concepts already, but I'm just struggling like to find a way to apply them all together in a profitable way.
sure, sure. What do you think are your main strengths as a trader and like your main weaknesses?
I'm not sure, I've thought that it could be like time management in a sense, like not sticking to one thing and applying it consistently enough.
Okay,
Just
yeah,
probably just like strategy hopping and like
yeah,
in information overload to a certain degree.
sure, sure, yeah. And where are you based in the world? Are you based in the UK or America?
Switzerland.
Oh, so I think you're 1 hour ahead of us, aren't you?
Yeah, exactly.
Oh, the reason why I asked that is obviously as you'll learn our trading strategy, you'll learn this, and I wrote that on the Signal page. If you look at go at right at the top of the page, these are the key times that the algorithm moves. So there's special times like within Asia, there's two special times. There's 1 o'clock in the morning, 3 o'clock in the morning. There's also London is 8:30. The reason why I asked is if you're struggling with the timing aspect is because maybe you haven't fully compartmentalized. Okay, these are the times that the trades happen. Because if you look at this buy over here that happened on Thursday going into Friday, if you look at the time, can you see the time where the buy happened?
Yeah.
Just after 1 o'clock. So you'll learn all these special times, and that's another way you can get more consistency. That if you know, okay, and you're in a good place like us because you can trade all the sessions, even Asia, but obviously you're going to be fatigued if you do stay up and trade Asia. So you have access to the London session and US session. So you have two out of the five sessions, and if you understand the timing element, like these are the times, the special times which trades are happening, you can your consistency will naturally increase as a trader. Like even this time in on Wednesday, FOMC 5 o'clock is a key time because as you'll learn is price once it makes the high or the low of the day 'cause when we're talking about a daily candle will have the opening price, right? Let's say we're talking about a bearish day, then it will create the high of the day, then it will create the low of the day, and then it will create the close. And obviously, you'll learn that. the low and the close has to happen at a certain time, and normally that happens around 5 or 6 o'clock. So once you, because how I compartmentalize trading, right, is to do with the five pillars of trading. So number one is structure, two is liquidity, your points of interest or your supply and demand zones are number three, time. So knowing like the special times in the day where things happen, and obviously risk management, and obviously risk management, you can even argue, is more important than all of these things because if you don't manage your risk, you don't have capital, so you're not even in the game. Yeah.
Yeah.
That's the final piece of it. Obviously, once you understand all of this, you're gonna have a good grasp of all the concepts, etc. But then obviously then the risk management is what keeps you in the game.
Yeah, in fact, today I watched one of your YouTube videos where you I think it was like a student like a session with a student that you had where you
Hmm.
described like the Sydney session and how there's a particular timing like in Asia where the low is or the low or high of Asia could form.
Exactly, yeah.
I think that's what you're talking about. Yeah.
Yep, yep. Yeah, so there's different algorithms. Yeah, that's exactly right. So I've just given you a quick example here. There you can see these times are consistent. 1 o'clock. So that
Yeah.
Sydney time that you were talking about, obviously for gold, because gold closes from 9 p.m. UK time and it reopens at 11, right? So that first the algorithm has to create liquidity in the market, right? Because it has to get people involved and get their orders into the market so stop losses can be induced, right? So that first hour from 11 to 12, if you look over here, yeah, price will create a range. Can you see this?
Yeah.
Yeah. I actually sent the trade to you guys here because obviously, I mean, for me, wasn't reading structure here correctly, so I didn't realize the 1 hour broke, and then obviously had to go out to create the 1 hour pullback. But you can see this box of liquidity right now. On this box of liquidity, you've naturally got stop losses on either side, haven't you?
Yeah.
Yeah. And obviously at 12 o'clock, the first hour on gold or the first 2 hours on forex pairs, it's the Sydney session because what the misconception is that this is Asia and Asia is just Tokyo, right? That's not true because there's another country that's involved, and it's obviously that's Australia and Sydney. Those guys have a very important job because they give us the opening price of the day. Yeah. And then they create that first pool of liquidity in the market, this box over here. And what you should do if you're not already in trades, we were already in a trade here, right? But if you're not in a trade going into Sydney, you should not take any trades in that first 1 hour or the first 2 hours because you should allow that range to build. And also because we don't know which side of the liquidity pool the algorithm will target. So we cannot know. Like when prices hit, right? If I go replay tool here, no one can know unless you're insider trading which side the liquidity can get target. Later on, you can get a bit clever because you can understand structure and be like, okay, this was the last order block. This broke the high. So more probably the algorithm will come lower, but it's too it's you're guessing too much at that stage, right? So what we say
Yeah.
is for the first hour from 11 to 12, don't do anything, and then 12 to 1, watch price. See which side of the algorithm, which side of the low it runs, and obviously you can see it runs the low, right? Once it runs the low, if the trade makes sense from a structure standpoint, and also what it's doing from a higher standpoint, there is a trade that can come into play at 1 o'clock. Yeah. Other times it will be 3 o'clock. Those are the two key main times in Asia. So if you backtest and this works on all the charts because the trading is algorithmic, right? It's controlled by the five sessions in the market, the Asia session, London, US, etc. So these times are quite relevant to all the pairs, whatever pairs you trade. Does that make sense?
Yeah, that makes sense. Yeah.
So on this day, this was the low of the day, and that's what I'm talking about. And that's how if you can understand price action from an algorithmic point, you can often take the highs and lows of the day. Yeah. And obviously, I'm sure you studied ICT. ICT says often the low of the day happens in London. It's not always true. Yeah. Because it's not always, sometimes Asia actually gives you the low of the day.
Yeah, in fact, this is I think where I used to get burned quite a bit because I would look for those like the daily cycle that's like a single-sided liquidation.
Hmm.
But in fact it would just be like this where it would just continue going up the whole day.
Yeah. So there's rules around that. So, I mean, when we used to teach the students, I don't know if it's in those videos we saw, we had like specific, and I'll try and find those. We had specific models that I was trying to learn, and I think we figured it out. There's two variations, isn't it, in general in the market. There's a situation where only one side of Asia would get liquidated. Agreed? Yeah.
Yeah.
And situation number two is when both sides in the day get raided. So they might do the raiding, and there's different variations of this in the day, right? Of different times when this can happen, both sides will get run, right? The one side liquidation days are actually the easier days to trade because in these models, right, there's only two variations that price takes in terms of time. In the variations of where both sides of Asia get run, right, it's more complicated. There's like 7 or 8 variations which price can take with time. Yeah. So
Okay.
the one side liquidation, it's there's actually only two models of this, right? The one, as far as I remember, right, is the more aggressive model, is that will have build-up of Asia, right? And obviously, within this you'll have Sydney, for example, yeah, making the range, yeah. Then obviously over here, price will go down until let's say 3 o'clock or 1 o'clock. Yeah. By the time we come here, we're at 6 o'clock. Okay. From 6 till 7, you might have a slight pullback in the market because that's when Frankfurt starts. Yeah. At that point, if this is the more aggressive model, price will just trip and just keep trending hard. Yeah. And it will, what time do you think it will trend till?
New York
Yeah,
opening.
12. Just before, not the main. So the session goes, so it's London, right, which is 8 till I think 11:45. Yeah, it's pure London. Yeah. At this point, obviously, what happens at 11:45 in the UK? People go to lunch, don't they?
Yeah, yeah.
So at this point, the US session guys come in, right? So from 12 till 2 is an overlap between London and US. Yeah. And then obviously 2 to 3, there's a bit of an overlap as well. And then three to 9 is pure US session. Yeah. So the algorithm here will trend till 12 o'clock. You will have a retracement then over here until 3 o'clock. Yeah. And then for the rest of the day from 3 till 9, you'll have a continuation play. And I'll find you examples. There was a pretty nice day that happened. Try and find it here. Yeah, you see on this day, price, no, let me try and find a day where this happens. Yeah, so over here you can see, right? One side liquidation price trended down to what time? Can you see that? 12 o'clock.
Yeah.
And
Hmm.
then we pushed back until 2:30, 3 o'clock, and 3 o'clock was a continuation move. Can you see this?
Yeah, I can.
Yeah. So the days where you think Asia is going to be one side liquidation, they're actually they're quite profitable days for you because there's only two variations where this model can take. Does that make sense? Yeah.
Yeah, that makes sense. Yeah.
So we should really be excited when we see. Obviously, I didn't read this the best because for me, right, I wasn't. If you look at, because obviously, let's talk about structure here, and we'll go more on the algorithmic side because I think you understand the basics, but there's more stuff you'll see from us that we do it slightly differently. So first thing, right, before we even look at what are we doing on the pair, right? Let's talk because we incorporate the fundamentals into our trading as well. This is more stuff I learned in the last year or so. I'd never used to look at the fundamentals that much, but as you get more advanced and you start managing bigger and bigger amounts of money, it's important to understand the interest rate side and the CPI prints. Have you ever looked at the interest rates and all these things or not?
I have not looked at interest rates. I do look at sentiment sometimes.
So interest rates is the most important thing in the market. And if you notice, right, on all of these on a monthly basis, the FOMC minutes and all these kind of events, they're very important. They're marked highly red. And the reason why interest rates are important, right, is to do with two things, right? It's to do with supply and demand, right? So what do you think what happens when interest rates go up from a general standpoint? What do you think happens when interest rates go up? Any ideas? Can you guys hear me or not?
Yeah, I can hear you. I'm not sure to be honest.
I'm asking as it relates to businesses, right? Let's say you're a business owner, right? And the interest rates have been at a certain level, right? Now the government starts increasing the interest rates, right? We know most businesses how do they function, right? They function by taking loans from banks, agreed?
Yeah.
Right? Or lines of credit, right? So now if the interest rate goes up, what does that mean for them? It means the businesses they're not willing to take out the loans at the higher interest rates, or they might not even get approved anyway. Agreed? Now
Yeah.
these businesses do not have liquidity to do what? Keep up with payroll. Agreed? Yeah.
Yeah.
Now, if they can't keep up the payroll, what happens to their employees? Do they get fired? Yes. Right? Yeah. Now, if people
Yeah.
are getting unemployed, it means what? They don't have any disposable income to do what? Invest
Spend
in,
money.
yeah, spend money into the economy. And more importantly, as it relates to all of these pairs, invest money into certain things like crypto, gold, and stocks. Agreed? Yeah.
Yeah.
That's why when interest rates go up, like it happened in the 2022, you will see gold sank, right? If you go back and test what was happening to the interest rate market, and I'll show you that graph. Because the graph, you see all of this from March 2022. You see this drop in gold? It was almost
Yeah.
4,000 points, right? And that's the understanding behind that. Basically, if interest rates go up, businesses cannot get the loans at a higher interest rate, so they start firing people. When people get fired, they do not have any disposable income, obviously, because they need to pay rent and food, etc. If you've only got income to pay for food, right, or rent, are you going to have money to invest in Bitcoin?
Yeah.
No, right? Are you going to have money to invest in gold? No, right? Are you going to have money to invest in the stock market? And that's why if you go back on all your charts last week when this news announcement came out, what happened to Bitcoin? Started dropping, right? Yeah. What happened to gold? Started dropping. So overall, it's good to understand from an overall macro picture which side of the aisle you should be trading. Does that make sense?
Yeah. That makes sense. Yeah.
So also another important differentiation is between the US cash, right, and the US stock market. They're not the same thing. Yeah. So when money moves out of the stock market, right, and money moves out of gold and crypto, right, it actually moves into the physical dollar, right? That's why the dollar index goes up when interest rates go high. So it's a common misconception that when we go into a recession, that the dollar gets weaker. If you look at any recessionary market, right, even that period when in 2008 or whatever, right, you will find if you go back, test your graph of the dollar index, right, that the dollar actually, if you go on, yeah, look, 2022 when gold started pushing, can you see what happened to the dollar?
Yeah.
Went up, didn't it? Right? It's
Yeah.
because people conflate that the stock market, right, which is to do with companies, is the same thing as the physical cash. It's not. Okay. Yeah. They're two different things, right? And obviously, we're talking about a closed system. Well, sorry, let me delete this. We're talking about a closed system here, right? These are all your asset classes, right? So you've got crypto on one side, you've got gold here, right? You've got stock market or indices, as you often, if you watch Bloomberg, they'll call the stock market indices, right? And you've got the physical cash, right? So if money's leaving your gold, let me put that G, yeah, on crypto, let me put B, right? If money's leaving these things in the system, it has to go somewhere, doesn't it? Yeah. So it goes into the physical cash. Is that making sense?
Yeah. That makes a lot
Yeah.
of sense.
And on the converse side, if they drop interest rates, what do you think happens? It means now people can get loans much easier. More importantly, businesses can get loans much easier. That means they have increased lines of credit. They can hire people. Now people are employed, people are on a higher salary. If people have higher salaries, what can they do? Naturally, right? They invest in the economy, agreed? Yeah. So
Yeah.
they invest in gold, crypto, etc. That's why we had these massive rallies on crypto and gold because the Fed actually reduced their stance last year in December. They said we will not be hiking interest rates as much as we had been. You see, so that was kind of a softening on that stance that we had been increasing interest rates all of 2023 and all of 2022, but we won't be doing it as much. So then that's why all these things rallied. Yeah. Now, if you understand all of that, now when you're trading from a technical standpoint, you can also hold your trades longer. Does that make sense?
Yeah. That makes a lot of sense.
Because the only way you can swing a trade, right, with confidence, not confidence, but without worrying about, oh, will it take me out, etc., is if you have the fundamental wind behind you. Yeah. So last week was in there was two important releases, right? There was the consumer. So this is all to do with it. The CPI is to do with inflation, okay? This is how much things cost in the economy. So how much does oil cost? How much does food cost, right? So the important one to track is the year on year. So that's telling you, okay, on a year to year perspective, what is happening to inflation? And you can see that on a year to year, inflation's actually coming down, isn't it? Yeah. It's 3.6%. It's come down to 3.4%. Agreed? Yeah.
Hmm.
That's good. That means what the Fed is doing with the interest rate policy at the moment is bringing interest rate, the inflation down. So the price of costs and goods is actually reducing. Okay. So now, you might not have been able to predict this unless you're a bit more advanced as a trader, but you have to think, right? Because the key with trading is, and you didn't always, you don't, I know we sent the trade, right? But you don't have to trade, you don't have to trade this. But as you get more advanced, you'll be able to kind of project what the Fed will likely do, right? So obviously, the inflation has come down by 0.2%, which is good, which is what we want. But if you follow the Fed, they say our target interest rate is 2% for inflation. Okay. It's 3.4% at 2%. It's not, is it? Yeah. We're not quite at 2%, right? So what is the Fed most likely to do? They're more likely to keep interest rates higher for longer so this number can keep coming down. Is that making sense?
That makes sense. Yeah.
Yeah. Also, adding on to this, I don't know if you remember, do you remember non-farm payroll last week?
Yeah.
The number was quite high, wasn't it?
Yeah.
It was like 370K. So, with the interest rates we've been talking about, if businesses cannot get the loans, then they will fire people, right? So, one of the key metrics the government looks at or the federal bank looks at is the number of jobs that are being created in the economy. Is that making sense? So, obviously, if last week it still showed that a lot of people are still getting employed. What does that mean? It means that people still have money to do what? Spend in the economy, buy houses, buy cars, etc. This is bad from their point of view because they cannot have everyone buying everything up. Is that making sense?
That makes sense. Yeah.
They have to control the supply and demand dynamics, right? That's why when that news came out, that also should have hinted us that they would continue to increase interest rates because they want to control that balance. Is that making sense? Normally, the US adds around 200,000 jobs, but on this occasion, it was even higher. I think it's around 350,000. So you see, the only three, I mean, there's other metrics you can track, right? But from a trading perspective, you should always be aware from a fundamental standpoint where the Fed is leaning towards, right? Are they leaning more towards increasing interest rates or dropping interest rates? And you should always track that number of the jobs created because that's important, right? So if next month, for example, this month is 350,000, yeah, next month we get the NFP data, and this month was 350, and let's say next month is 600K jobs added, okay? That should be alarm bells. That's quite significant for us as traders. Because what does that mean? It means that the US economy is still adding a lot of jobs. So what is the Fed more likely to do? Keep interest rates higher. Is that making sense?
Yeah.
They might even increase it even more. So that would tell us that if the interest rates are going to be keep pushed higher, what did we talk about? That will mean dollar is going to keep going up. Is that making sense? Because
Yeah.
money will flow out of gold, money will flow out of crypto and stocks and into the physical cash. Now our job becomes slightly easier because then we know well everything in the market is traded against the dollar. Agreed? Yeah. It means what's going to happen to pound USD if the dollar gets stronger. Pound USD goes down, Euro USD goes down. So it really helps your directional bias. Does that make sense?
Yeah. That's pretty cool to see how everything's connected.
Yeah, exactly. So a lot of traders, and even if you watch, and I was watching some interviews on YouTube yesterday, they do not consider this side of the equation, and it's really important. But if you look at the more elite traders who are managing bigger portfolios and sums, right, they know this, right? And I'm sure, have you seen the show Billions?
No, I have not.
This is a TV show about a hedge fund, but on that there's a specific scene, right, where the main guy who runs the hedge fund, he's leaving his team because something's going on, and he asks the second person who's in charge, says, "Okay, I want you to tell me what's your outlook for the Fed for the next FOMC meeting because it's important." Yeah. If
Yeah.
you as a trader don't know which way the dollar is heading, yeah, of course, from a technical standpoint, you can try and analyze it. But as you become more advanced, right, and this is the problem I think you were describing, is there's too much information, right? How do you know it's going to go down or up? You can make a case the more advanced you get as a trader. Look, dollar index is coming here. We could be going down. Agreed? Yeah. But the only way that really compartmentalizes that problem is if you follow the interest rate story and the jobs data. Yeah. The other metric you can track is the earnings. Because obviously, if the earnings, and I think that data gets released the same time as the non-farm payroll data gets released. So if you track the earnings as well, that would show you that if obviously the earning power increases in between people, then obviously they're spending more in the economy. What day did that come out? I think it was last week, wasn't it? Jobless claims. Yeah. So jobless claims is another thing you can track because that's to do with the employment thing again. Does that make sense? Yeah. So
Yeah.
interest rates, employment rates, and the earnings are you should be definitely tracking. These are pivotal markers. Yeah.
Okay.
Hourly earnings. See, so look, over hourly earnings went up as well, right? So the Fed's going to be looking at all of this data. Sorry, 272,000. So the Fed's going to be would have been looking at and by the way, they get this data ahead of us, right? Few days, I don't know. They could get it any time, so they know this data already, right? So they would have seen this and said, "Look, okay, look, we know inflation is coming down, but look, people are still the employment rate is still going up. They're still spending in the economy. If they continue to do that, then the supply is going to get depleted even more. We cannot have this. So what do we have to do? We have to increase the interest rates. So they basically fought one of the mandates for the Fed is right. They have to control the employment rate. They cannot have everyone employed. Yeah, if you ever listen to the like what's his name Powell, he testified in front of Congress, and they asked him. They said, if you do realize if you continue to increase interest rates, more and more Americans will be unemployed. And he said, yeah, but that's not my mandate. My mandate is to control the inflation rate. And I've been given a mandate by the government to control how many people are employed. I don't care what the net consequence is. Is that making sense? Because
Yeah.
if you think about it, if everyone in the economy was employed, that would screw everything up because then people will not do the normal jobs. Agreed? Yeah. And obviously everything will get bought up. So you really have to understand this. And so the key metrics again to track are the interest rates, the non-farm payrolls, and you can basically put this in your notebook or whatever. And even if you don't want to do that, you can go on Google and type these things, and they will show you the trend over time. Does that make sense? And that will inform your trading decisions a lot better. Yeah.
Cool. Yeah.
So, Ben, any questions about that?
No, man, all good. Sean, I probably should have introduced myself at the beginning. Um, but I work alongside Ali here. If in the week you've got any questions about anything, you can always reach out to me as well. And or one of us will definitely get back to you.
Yeah,
Um,
appreciate it. I thought I was talking like just talking myself too much throughout the lesson, but
No, no,
glad
no,
to know
no.
you work together. Yeah.
you're
We
fine.
we want people that are engaged, really. Like the fact that three or four people said they turn up, they haven't. Is we're glad that you're here. From my personal journey, I started as a student with Ali, what, 3 years ago, probably.
End of 2021.
Um, which started off me simply just asking to learn for free. And
Yeah.
Ali was kind enough to invite me over, and I just put in the work. And it's, like we want to engage so you can ask questions, even if it's about the markets, things you're seeing. Um, we'd love to hear it and keep seeing how you progress over the
Yeah.
coming
The
months.
community will get bigger. I don't know if you know, but we had like over 300 students in like 2021. So obviously we just started, but I think in the next 2, 3, 4 weeks, the community will get bigger.
Exciting stuff. Yeah.
And obviously people say why do people mentor and this, that, and the other? I think the main reason why anyone mentors, and I found this for myself, right? You get better as a trader because you talk about these things actively. I don't know if you ever found that if you trade by yourself, it's quite a passive process, right? But if you're talking about it with other people, naturally, then the work gets done anyway. So, as you find out in the team calls when we talk about the trades, you won't have to do much work during the week because we've already spoken about it. You already know, okay, this is how I frame the week. These are the things I'm looking for. If I see these things, it becomes a more fluid process and you make less mistakes.
Definitely, yeah.
Because the system is quite intricate, right? It's you have to know structure, right? Within structure, you're analyzing, okay, what time frames are in different structure. Then you have to know, like, okay, we haven't discussed it, right? But when price approaches a supply and demand zone, right? What are the things we look for, right? There's a new model of structure I'll teach you as well. It's not on the internet anywhere. You'll learn that. You've got to track that, and that's a fractal model. Then the time element of it, of all the the one side liquidation model, the daily cycle, the week, there's a lot to go through, right? And if you're not actively talking about this, then you become rusty. It doesn't matter how talented you are as a trader. If you don't have that conscious practice in, you're going to make mistakes. Yeah, because this buy wasn't difficult for us, but obviously we weren't talking about it. We weren't on team calls. I wasn't feeling so confident about the buy. But if you look at this buy was not difficult for us to take, right? Even the buys that happened here, that last week could have been an easily 3-4 thousand pip week, if we had been a bit more locked in, and that's the point, because you'll learn that the system that you trade can capture all of these moves because it's understanding price action fully, as I've demonstrated, like through even the fundamental knowledge, right? You underpin that. Like a lot of people will come into this week, they won't know is gold gonna buy or sell, but based on the fundamentals that are described, we know we should be looking for sells on gold, right? Agreed? Yeah.
Yeah.
And even in pound USD, you saw the dramatic drops last Friday and Thursday because of all of this stuff. Ben, do you want to reset the call? We reset the call and continue. Ben.
Yeah, yeah, sounds good. Sean, we'll send you another link in a second and carry on.
Oh, right, because it's like 90 minutes limited or something, right?
Yeah, we'll just reset the call.
Yeah,
Okay, that's fine.
see you in a minute.
Moment. Track the spending, and yeah, and definitely listen to the FOMC minutes. We touched briefly before we went on to talk about the fundamentals. We talked about the one side liquidation model, right? And let me get a clean chart here. But on the left, I showed you the one variation where obviously we build Asia, right? And then we'll have that aggressive push out until 12 o'clock. Yeah. And then you'll have that retracement till what time? 3 o'clock. Yeah. And then you can have a continuation for the rest of the day. Yeah. Now, if you know this, yeah, and if you don't get the move within Asia, okay. I mean, there's two things very important here, right? Let's say you do enter here in Asia. Okay, you've got an entry here in Asia. Yeah. There's two things that are going to happen to you here. When it comes to 12 o'clock, right? If you know this, you can take this two ways, right? Either you're going to take profit here and look for the reversal trade and get in on the continuation, but that can be hard because it's a more advanced skill. But psychologically, you should be prepared if you understand it's a one-side liquidation that to withstand that pullback, basically. Yeah. Like on that day I showed you, yeah, if you had understood you're in a one-side liquidation model on what day was it? Do you remember? We were looking at it. Yeah, on this date, right? If you had understood, okay. I mean, do you remember what day it was?
I think it was a few days back from this one.
This one, wasn't it? Yeah, this one, right? If you
Oh,
had
yeah, that one, yeah.
if you had gotten on the trade, let's say here, right, within Asia, right, 1 o'clock, let's say, for example, and you're in that trade, because I remember taking this trade and I had the same issues when it came to 12 o'clock. I knew the pullback was coming. So as a trader, do you think, am I going to continue to hold the trade or am I going to take profit? Because you can trade this with time. You see, right on 12 o'clock, the pullback starts happening, and then would have had lower time frame shift here, right? And that see, it didn't quite happen at 3 o'clock, but 2:30 to 3 o'clock, the continuation play happened, right? So you have to, if you're in a one-side liquidation model, you have to psychologically compartmentalize what are you going to do in that day? Or when it pushes up to 12 o'clock, are you going to take profit and look for the re-entry at 2:30? Or are you just going to, for that 3 hour period, do nothing, let your top entries run? More, I mean, it's a personal preference, right? You can take the sells, take the buys, and take the sells, but again, that's more advanced. But psychologically, at least you're aware why you're getting the pullback. Is that making sense?
Yeah.
Yeah. Because half of the issue is people don't have the awareness of what to expect. So then that becomes a battle. I don't know what's going to happen, right? But with probability, if you're aware, okay. Also, the second, because it's at a key time, 12 o'clock can give you the shift to break the high, right? But I think the reason why you get the one side liquidation model on that day, particularly, is because the day was printed on external structure. Does that make sense? So if you look at this Asia range, right, you have external structure here. Can you see this? Yeah.
Yeah.
You have an external push, and this is printed on the external of the internal, and you've got the external structure. So they were really protecting these highs, right? And it's all probabilities because on a two-side liquidation model at 12 o'clock, if this was two-side liquidation, this would have definitely gone and swept the high. Agreed? Yeah. But because you were in a one-side liquidation model, you know, that was the daily cycle in play. Is that making sense?
That makes sense. Yeah.
Yeah. And
Yeah.
also, you could have said, okay, well, technically, we've still got the liquidity pool there, which is basically, in my mind, making the case that we are in a one-side liquidation model. Yeah. Because it's nuanced. Trading is nuanced, right? Elite level trading is nuanced, and that's what the elite traders do. They get these small decisions right. Yeah. Not and to be fair, you could have said, look, I've got I mean that's a big move, isn't it? 370 pips. I've got 370, I can call it a day there. Yeah. I don't even have to trade the 12 to 3, the continuation. Does that make sense? Yeah.
That makes sense. Yeah. I have like a sort of more general question. Do you ever trade against structure?
Yeah, you can.
Like,
Yeah.
because what I personally found more success with is I used to be like a pretty heavy structured trader, like the usual smart money concepts.
Yeah.
So what I would do is I just mark out structure, find an order block, and like, okay, like most of the times I'd lose. But what I do now is I would mark the break of structure where I usually mark it, and then I just try to trade the pullback basically
Yeah.
into
Yeah.
supplier demand
So
zones. Yeah.
you saw that on Wednesday, right? So on this, and this is to do with the newer models that I'll discuss in a second, but you saw on this trade that we traded the pullback into the continuation, right?
Yeah, right. This was
So,
pretty impressive.
but the reason is this happens consistently, right? It's like even happening on this sec. I mean, we could have caught it on this segment of price action here, right? The reason for that is, yeah, and this is a new model of theory, right? So everything in the market is what? Essentially, it's an impulse, isn't it? Agreed? Yeah. At any
Yeah.
given point in time, the market's what is it doing? It's making an impulse. So right now, in 1 hour, what's it doing? Making an impulse, isn't it? Agreed?
Right. Yeah.
Yeah. If we go on the weekly time frame, right, and if we're trading the from a weekly perspective, right, this is the last weekly structure. What is this making? An impulse, isn't it? Agreed? Yeah.
Yeah.
So if we understand each point of the impulse and the behavior of price within each point of the impulse, you can then do the ping ponging thing. Is that making sense? Yeah.
Okay, right. So I guess that's what you're referring to when you would write like phase. I'm
Exactly.
not familiar with
Yeah,
your system, but
exactly.
I guess you'd
Yeah.
mark it with the phases, right?
Yeah, exactly. So
Okay.
this is the most basic version of it, right? And the point here is the reason why this system is important is because if you don't have this system, how can you trade here? You can't because you won't know what to look for, right? Agreed? What is the
Yeah.
well, my mouse is slipping, sorry. What you have to essentially understand is what's the price behavior here? Agreed? Yeah. What's the price behavior as it's pulling back? Because there are specific things that happen. Yeah. What's the price behavior at the end when we get a return? Yeah. Yeah. Because
Okay.
structure, let's say 1 hour, right? That's what you're talking about. I would trade the pullbacks, right? You can trade the pullbacks because eventually the 1 hour lower low is going to make a 1 hour lower high, is going to make a 1 hour lower low. Eventually, it has to make a 1 hour lower high, isn't it? Agreed? Yeah.
Yeah.
But let's say that situation even doesn't happen, and let's say you make a new high. If you have an understanding of this model, now you can even understand it and trade this way. It doesn't matter what the market does. Yeah. It gives you that fluid approach, and I'll show you that in a minute, right? So the markings was just how it happened when I was making this, right? We call this, and the numbering is not going to make much sense right now. The start of any impulse, right? We call this phase 4. Let me write it in text, maybe make it easier. So we call the start of any impulse phase 4. Okay. I had to start the cycle off somewhere, right? We could have started off the cycle here. We could have started off the cycle here. It doesn't matter, right? But let's start off the cycle from when the start of the push, right? When price makes a new high, we call that phase 5. Okay. Yeah.
So a new high or a new low, right? It would be the
Exactly.
same.
Yeah.
Okay.
A new high or new low. So in this case, this is a new low. Yeah. Let's mark out, let's say this is a structure point here, right? And we got a breaker structure here. Agreed? Yeah?
Okay.
So this is just basic detail. We're going to add more detail into this, right? We call this part of the thing phase 1, right? Which is basically the trend back to external structure. Okay, so phase 1 is the trend back to external structure. Is that making sense? Yeah?
Okay. Yeah.
Now, once phase 1 comes back here, right? First of all, phase 1 is the most manipulated segment of price action, because what have we actually got here? We've got a range, haven't we? Agreed? Yeah. So remember, in trading, everyone's looking at the same market, right? Everyone's looking at the same, but people are trading through common knowledge. And what's the common knowledge in the market? Support and resistance levels, agreed? Yeah.
Yep.
Fib levels, agreed, right? So
Yep.
the point of becoming an elite trader, right, is not only seeing what you're doing and how you're interacting with the market, but it's also how everyone else is interacting with the market, right? So if you've got a range here, people are people not looking at the 61 fib level? Agreed. They are, aren't they? Yeah.
Definitely. Yeah.
Are ICT traders not looking at the 70.5 fib levels? They are, aren't they? Right. So within this paradigm, whereas price is pulling back within this range, you will get reactions happening at those key fib levels or key support and resistance levels. And if you're aware of that, you can take advantage of that fact as well. Is that making sense? So
Right. I think, sorry to interrupt, just like a basic application that I do to that would be like, for example, if I see a smart money like order block, you know, that follows structure,
yeah.
and then I see a reaction from that's basically what you're talking about, right? That's like manipulating the fake reaction to then continue higher and take out.
Exactly. You're anticipating where those fake reactions, exactly, right? So let's say, I mean, it didn't happen much on this range pullback. Anyway, let's say we were in the buy, right? And we were looking at anticipate. It's all about anticipation, really, right? We're anticipating where the reactions could have happened on this range, right? You basically use your fib tool, and you would already have marked ahead of time. Look, on the 61 fib level, I could get a reaction. Does that make sense? Yeah.
Yep.
And I think on the 61 fib level, we did get a reaction. If I play it forwards and slightly speed it up to, come on, let me go speed up 15 minutes. I think we did get a reaction. Well, yeah. If you look over here in that segment of price action over here, because I remember I sent this trade at the time, we did get a reaction on that 61 fib level. We did get a reaction on around the 6170.5 levels over here, specifically the ICT level. I remember. Let me play this forwards. Yeah, you see that?
Yep.
We got a reaction. So these are your inducement levels, basically. These are levels where the market, because the market has created a range, isn't it? And this is what phase 1, isn't it? People are looking at this range, and the market is making people interact with the market by producing something visually, i.e. a range where they're going to fib, and on there they're saying, okay, this is the 6170.5 level. This is where I'm going to enter the markets. And you can see we got a nice strong reaction, didn't we? Yeah. But did the market sustain that move? It didn't, did it? Agreed? Yeah.
Yeah. Yeah.
ICT traders would only work here if they entered here and they put their stop loss at 23.41. I mean, but that's a pretty wide stop loss, right? We're not when we're trying to get our precision a bit more tighter than that. So they would have made money here, but the thing is they're looking for this move to continue much longer. Is that making sense? Yeah. So
Yeah, yeah.
essentially the markets induce stop losses here, right? So one of the first features that you look for, right? Because we basically split up price into three components, okay? To make it better, like compartmentalizing our mind, right? We have to understand what price does before it reaches the POI, okay? Yeah. How price behaves within the POI, yeah, and how does price behave as it's ready to leave the POI? Is that making sense?
That makes sense. Yeah.
Yeah. And that's on every fractal model, right? So if, for example, to demonstrate that point, yeah, if I go on M1 on let's say an M1 model of price action, right? Can you see this? Wait, let me
Yeah.
get in. What do we have here? We have an impulse, don't we? Agreed? Yeah. Agreed?
Okay.
Yeah. That's an impulse, isn't it? Am I wrong?
Yeah.
Within that impulse, we're going to have the same characteristic behavior of people looking at that range and trying to interact with it. Okay. So even on this, if we were to fib this, right, and fib it from the top to the bottom, right, you can see, look, around the 61 fib, do we not get a reaction? We do, don't we? Can you see this? Yeah.
Yeah.
We get a reaction, don't we? Right. And then we got another reaction into a slightly 70.5 level. And what does happen? Price gives a break of structure, but the first break of structure is always the inducement. Is that making sense?
Okay.
Yeah. In any range that you want to be, and in any range that's going to give you a turn, right? When price is pulling back in phase one, right? The first breaker structure at a key inducement level 61 or 70.5, the first breaker structure, yeah, is always going to give you, it's going to give you that breaker structure, right? But what happens when it gives a breaker structure? What are people trying to do now? Short this, aren't they? Agreed?
Yeah.
Yeah. And
Makes sense.
what normally happens when they try and short this? Price doesn't respect it, does it? Yeah. Price cuts through it, doesn't it? Yeah.
So I guess that's where you, on a more advanced level, would look for buys, basically
Yeah,
continuation.
you can. You don't always have to do this, right? Because obviously, as you get more advanced, one of the key skills you have to exercise is constraint as well. Because you will have the knowledge. Let's say you're working with an M1 range here, right? We could trade the sell off into the buys, but is it necessary? Because on the context of what's happening on slightly higher, we're actually looking for the expansion. Is that making sense? Yeah.
Yeah.
But you still have to be aware that's what's going on. Because let's say I sent the entry here on Friday's close, right? And it broke the structure, but because my analysis wasn't complete, it went back up, but then it went back down. But then I still know my idea is correct because what? Because, oh yeah, I forgot that at an inducement level, the first breaker structure is always an inducement, right? So your idea is still valid. Yeah.
Okay.
But the idea here is why this is always important is because they have to induce stop losses over here so price can now continue lower. Because right now, when price is pushing up into a range over here, there aren't that many. I mean, there's order flow liquidity, right? But the market's really trying to get more people involved in the move, right? So the first breaker structure is always going to give you the false one. Is that making sense? Yeah.
Yeah.
Always at the highs or the lows of a trend, right? It's always the same behavior. And if you follow Wakar's podcast, Titans of Tomorrow, he's talking about okay, he's now seeing that the first breaker structure doesn't give you the entry, but that's always been the case. Is that people have not understood in that mind why this is happening? Is that making sense? Yeah.
Yeah. Yeah.
A range is a living environment where traders are interacting. Okay, so the first break is always inducement. Yeah. Does that make sense?
Yeah. That makes a lot of sense. It's pretty cool.
Yeah. So when you were talking about that, I'm getting quite stuck that I can't put it all together. It's these small details possibly that you hadn't quite compartmentalized. Because even on the bottom of here, right, if we were to go on it, the same behavior happened. We would have got a false change of when price has making a new low over here, right, and it's trending down here, yeah. we got the same false change, then we get the true change, then you look for the buys. Is that making sense?
Yeah.
Yeah. Even in this segment over here, because I back tested this before the call, if you look on this segment here, the same behavior. Let me go on this now and show you on this segment here. Again, what is this? It's a range, isn't it? It's an impulse, isn't it? Agreed? Yeah. So look, price is coming down here. Would you agree? Price is making, let's mark this out. Lower lows. Let's change the color. 1 second. Is the color tool gone? There, red. Red. Okay. Price is making lower lows. Oops. Is this thing gone? Highlight. Price is making lower lows, lower highs, right? Lower lows, lower high, lower low. What happens here? Makes a higher high, doesn't it? Yeah. It's an inducement, isn't it? Agreed? Yeah.
Yeah, definitely.
If
Yeah.
we were to fib this, again, where does the inducement happen? Look, 61.8. Yeah. And this is what you were saying, right? As you become more advanced, because this is quite a big range. If you had caught the sells here, right, and you're really locked into this theory, you could get out of the sells here, take the buys here, and then get back into the sells. Because over here you do get a small shift. Can you see this?
Yep.
You get a higher high, higher low, higher high, lower low, lower high. So that would have been, so there's always three trades in play, right? In a range, right? Let's say from a range from this side, right? You have, let's say price is coming down here, right? The first trade is always, you can have the inducement trade. Yeah. Over here, you'll have a change. So you'll have the what? Liquidation trade. Yeah. Now you're on true demand, right? And you're looking for another shift here, which is a true one. There's three real trades before an expansion. Does that making sense?
Yeah, that makes
That's
sense.
if you're really trying to exploit the range, and you can, because these are 50 pip ranges. This move, if you caught it, was quite a nice risk to reward, to be fair. From this, if you caught this move, this would have been quite a high risk to reward trade to take. It's already a 1 to 4. It's not a bad trade. Yeah. Is that making sense?
Yeah.
Yeah. And you can see this is a 4 minute range, and it's the same concept as I'm describing on the 1 hour range, right? So just to recap, and let's go slightly on a higher model over here. So that model that you're learning now with the impulse, it's a fractal model. That's why it's important, because it's applicable whether you're on a 4 hour range or a 1 hour range. 1 minute range is the same thing. So just to reorientate you, if we were looking at, let's say our idea was right, we were looking to, I don't know, we have this weekly structure here, right? And price is currently here, right? And we're looking to buy again at this weekly point here, yeah? When price is coming back down here, right? We have to be aware of our 61 levels, so 70 point, because this is where the market will do the what? Give the false change. Is that making sense?
Yeah.
Yeah. And over here, we could look for the more advanced liquidation trade here. And if you can do this, obviously, it's very cool trading, because normal people can't rationalize how you're doing this, but it's not rocket science. It's simply understanding, is there not a key level of support and resistance in the market here? Resistance, resistance, resistance. Is that not a key level of support and resistance? Yeah, it is, isn't it? Agreed?
Yeah.
Yeah. That's what we call the flip zone, or the retail inducement line, or the inducement line, or where the inducement happens, right? And it always has to happen, because before price can go higher again, it has to do what? Induce stop losses here. There has to be a reason for price to go back up. Agreed?
Yeah.
Yeah. Then when you get the shift here, then the true expansion happens. And it's on all ranges. Yeah. So even if you look on Bitcoin right now, look, this is not marked, right? But if you look over here, price has been doing what? Over here, higher high, higher low, higher high, higher low, higher high, higher low. We got an M1 higher high, higher low, higher high. Does that not break down here? Lower low, isn't it? Right? So what is this?
Yeah.
Inducement, yeah. Liquidation, yeah. Now, over here, if you get the change of structure, now you've got the true change of structure. Is that making sense?
Okay.
Yeah. And if I go slightly higher time frame, if you look where that inducement happened, look, support level, support level, support level, support level. Did it not happen at the obvious support and resistance level? It did, didn't it? Yeah. So this range again, price is coming here. You have a key support and resistance level here, your inducement level over here. Yeah. Either on the 70 fib, 61, the basically the ICT zone and the fib levels, right? Over here you have that change, right? People think, okay, now the sales are coming to play. Not really. Liquidation. And now they've confused people, isn't it? Because now people here are looking for what? Buys as well. Can you see this?
Yep.
People will be looking for buys because over here, this is a change breaker structure to the upside. But in fact, we're respecting the higher time frame structure here. Yeah. And it's the same entry kind of model. Yeah. Now, how you can ping pong within that is when price breaks down structure here, what is the nomenclature? This is becomes what? The start of the impulse, doesn't it? Agreed? Let me write this down. So when price now is actually breaking structure for real, right? What is this now? Phase 4, isn't it? Agreed? Yeah.
Yep.
Price has done what now? And I'm talking about if we were gonna, let's say, ping pong the buys into the sells that you were talking about, right? Price is done over here. It's created a what? A new low, isn't it? Yeah.
Phase 5.
Yeah. And on the low, I don't think it gives the cleanest example here. On this low over here, you'd be looking for the same behavior. You'd be looking for price to give the false break, ideally the true break, and then the pullback. That's how, if you look, remember the example from gold on Wednesday, that's how we were able to do it. If I go back, do I get out of this? Yeah, on this example, let me go here. That's how we were able to do it. You see? So over here, price had come into a key time of we hadn't traded all of that move that day. So price had come into a key time over here, right? What's the structure here? Higher high, higher low, higher high, higher low, lower high, right? Broke structure, agreed? Yeah. I
Yep.
didn't take this trade, right? So I was then monitoring price over here, right? So you can see lower low. Let's mark this out so it's clear for everyone here. So we've got lower low, lower low, lower high, lower low, lower high, lower low, lower high. We've got that, haven't we? Yeah. It doesn't really give the false change here. But what I'm saying is you should know the rules. Sometimes price may not do that in 10% of examples. Is that making sense?
Yeah.
Yeah. You should look for that false change, the false inducement break. But if it doesn't give it, it doesn't give it, right? But over here, and I think you, if you scroll up on the Telegram or the Signal page, I actually said to you guys, I'm looking for buys here, but then I said cancel it. The reason why I said cancel it is because I noticed we've got equal lows here. Yeah. So all of these pushes over here, they should go and also sweep the liquidity left. Another thing is, right, this push from the top of the move to down often comes up, yeah, to the 61 fib level. Can you see this? Yeah.
Yeah.
That's another giveaway where the buys could happen. So let's say you have a supply and demand zone. Let me try and draw this out. So let's say you have a supply and demand zone over here. Agreed? Yeah. Price is coming into it. Yeah. You're looking for sales, but you don't catch the top of it, right? Because you don't need to, right? Often this move over here will end at the 61 fib retracement from the previous impulse. Is that making sense? Yeah.
Okay.
Because again, people are looking at this as a bullish range, so the market's inducing buyers here. Is that making sense?
Yeah.
That's why later on, when the sell happened here, the sell was very sharp because the people don't realize they've got liquidity induced here now. Yeah, there's invisible actual liquidity that's coming to the market from people that are buying here on the 61 fib. Is that making sense?
Yeah.
So often, if you're ever stuck, right, if you ever missed this move, to be honest with you, unless you have the POI nailed, you shouldn't really take the first hit into the POI. Yeah. So like the current trade on gold, I sent the first hit into that's not optimal trading because how do you know that zone's going to hold? Yeah, unless it's a really obvious one. Is that making sense?
Okay.
You should never take this first trade here. because you don't know whether this hot zone is validated, the supply is validated. Agreed?
Yeah.
Because price could just go higher. We don't know, right? But if you then spot, okay, there's been a strong reaction here. Where's that reaction? Because what I was thinking of here is, where is this reaction going to end? I know there has to be a buy into the sell because of our theory of the impulse, right? This is phase 4. We've created a new low, phase 5, haven't we? Right? We're essentially trying to trade within the impulse, aren't we? Agreed? So where is that low going to be created? If you ever want to figure out where that low is going to be created, you go back to the previous start of the push, right? And you would fib it, and it often comes to the 61 fib level because that's the natural point where market participants will step in. Is that making sense?
Okay.
Yeah. It's quite a clever thing. If you're watching, if because the thing here again, I was looking for the false change. We didn't get it, right? So when price was coming here, I was like, I haven't seen the false change of character, but does something else convince me that a buy could happen, right? And that was basically we're coming into the 61 fib of this range. So it made sense. Yeah. That this area was going to induce some buyers. Is that making sense?
Okay.
Yeah. And if you then look on this 15 on within the range itself over here, right, the same principles came into play. So if you look over here on this, and this is where you will be able to go on the lower time frames. It's not necessary in the beginning, but sometimes structure gets presented on seconds even, right? So if you look over here, you can see price over here was making what? Lower low, right? Lower high, right? Lower low, right? What does it do over here? It's a false change, isn't it? Can you see this? We
Yeah.
break structure to the upside, isn't it? The same thing happened. And did it happen at the flip zone? Yes, it did. Look, support, resistance, support. So it happened at a key level, and also they generated liquidity here. Can you see this? Yeah. Now they come down over here, right? And we probably even have to go, let me go slightly even lower. 5 seconds, 10 seconds. And by the way, if these candles ever get cluttered, right, there's an indicator you can use. It's called no gap candles, which basically covers all the candles. So you will always see it like as a normal chart. Yeah. So then when price came here, create a lower low, lower high, lower low. Now you've got the true change, and now the entry here becomes valid. Does that make sense?
Yeah, that makes sense. Yeah.
And I gave a slightly wider stop loss because obviously we're running a signal. I think somebody asked me this, so how wide the stop loss is. The thing is, with the signal service, you cannot always send the tightest entries because of people's spread issues when they enter the market. For a signal service, you have to give slightly wider stop losses. But from a optimal exercise, right? If you were doing this optimally, right, the stop loss from the entry here is minuscule. It's nothing.
Yeah.
It's 7-8 pips. I think this is even smaller, right? But is that making sense?
That
And
makes sense. Yeah.
what you're understanding here is the behavior of price at each point of its cycle. But that's one of the main keys that you have to always try and see the inducement. It may not happen on 10% of ranges, but on 90% of ranges, and I've shown you varying examples now on 4-minute ranges, 1-minute ranges, you should see that behavior. Yeah. Because then when you enter, you've got probability on your side that the market's going to turn. Is that making sense?
Yeah, that makes a lot of sense.
Yeah. So when we were trading here, that's how you can trade the pullback into the expansion. And the key here is, yeah, and I've been forgetting this recently. The thing you have to always do is always be tracking structure. Always be tracking structure. You can make that into an acronym or whatever, but you always have to track the structure. So even over here, I think you get the false change. If you see over here, you get higher high, higher low, higher high, higher low, higher high. What happens here? False change, doesn't it? Yeah. So then when price comes a higher high over here, what does it have to break? Once it breaks this, the entry comes into play. Is that making sense? Yeah.
Yeah, that makes sense.
Yeah. So that behavior is very. Ben, any questions?
No, man,
Not
all good from my side.
Yeah. So that behavior, let me go on the big diagram now, is very important. So what do you think are some other things you have to see in price, which basically like tell you or make a case that a price is ready to turn in the market? What? So we've seen one thing, we have to see that inducement. Yeah. What do you think are some other things we have to look for?
I mean, it may come like hand in hand, but I guess for there to be a inducement, there has to be some type of a buildup of liquidity in the first place.
Yeah, exactly. So the first thing you see is that false change over here. Over here, we want to see some build up, yeah. And the build up may sometimes even be two candles. On that previous example, there was a minor liquidity pull here, right? But you want to see that. What we call this build up, we give this a name. We say this is pre-phase two. Okay. So anything key is gonna have a name or something on it, right? So pre-phase two, obviously, is that build up of liquidity, and obviously then it's the change of character, and we call that phase two. Does that make sense? Yeah. Over here,
Okay.
over here. So this is pre-phase two. So this is phase two, the change of character. Yeah. This is often what you'll see on my diagram labeled, right? So now, if you want to trade the reversal back, you can, because remember, you've got one range here, agreed? You've got a bigger range here, agreed? Yeah. But on the same side, you're also creating a range here, aren't you? Yeah. You've got a fractal version of the bigger model in play here. Does that make
Yeah.
sense? Yeah. So again, what are you going to look for here? You're going to look for that same false change of thing, false change of character. Then you're going to look for that build up, as you said. What's that labeled as pre-phase two? Yeah. Then you look for that phase two change of character. And as a result of here, what have you created here? Another fractal model of a range, haven't you? Agreed? Yeah.
Okay. Yeah. Yeah.
It's that model, that's why it's key, because it's a fractal concept that basically no matter where you, let's say you're hit, right? Let's say price has now created a new high hit. What's this? Phase four, agreed? Yeah. What's this? Phase five. If you really wanted to, you could trade this pullback into here, take the buy up there, then take the sell over here. Is that making sense? Yeah.
Yeah.
It
Yeah.
allows you to it allows you to operate and ping pong within the range if you desire.
That's crazy.
Yeah. So that's the that's the beauty of this material, and you won't find this anywhere online because people have not simply thought, okay, the whole market is basically a wave. That's all it is. And if you understand what's going on in that wave, you can ping pong it, right? So let's talk about the Friday trades that I sent on gold, right? Again, what did I say? The first trades into the supply is not ideal because you don't know whether that supply or demand zone is going to hold. Agreed? Yeah. I didn't know. We didn't know, right? If let's go on the 1 hour. This zone over here that we were looking at over here, 45 less 30 minutes. We didn't, I mean, we don't know. I mean, you can't say for sure that zone's going to hold. Agreed, right? But the point here was because I'd seen the situation before. This was a very strong, obvious area of supply. Can you see this? You've got an IFC sitting here with an imbalance. Agreed, right?
Yeah.
Tapped into it. That's the only reason why I sent it. But from an ideal trading standpoint, we should not take this trade. Yeah, we should look to take the reversal trade back like we did on Wednesday. Does that make sense?
Okay.
Yeah. This is more high probability because you allow over here price to do what? This is the false over here. It breaks it down by like one pipette. So this is the false break over here. This is the true break. Yeah. Now you've got the pullback phase. We've got the pullback going back. Is that making sense?
Okay. Yeah.
Yeah. And then over here, you're looking for the same thing because over here, and they did some clever stuff here, right? So over here, they built liquidity. Can you see this?
Mhm.
Yeah. You had the order block, and I'll talk about the criteria for a really true order block over here. But they built up liquidity here. But let's say now you were in the buys here. I know we weren't, right? What did I say you always have to do? Always track structure. Agreed? Yeah. What do we
Yeah.
always do? Always track structure, whether it's M1 or 30 seconds or what. We always want them to get rid of the. Sorry about this. Let me get rid of this. So over here on prices here, we are doing what? We're always tracking structure, right? So we got what? Higher high, higher low, higher high. And what is this now? This is the break again, isn't it? This is pre-phase two. Look, internal liquidity built. And I've marked it here with the aeroplane. Change. You could actually take the move here to take it back if you really wanted to. But it's not necessary at that stage. Yeah. The main move should always be the big pullback, right? And then over here you're looking for the expansion because the expansion's coming. But if you really wanted to, you could ping pong this back for 30 pips if you really wanted to.
Just to let you know, we do have 1 minute remaining on this Zoom again.
Ben, do you want to reset the call? Or reset it?
Yes. I'll make it and then you